Creamer Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research at the World Platinum Investment Council. Trevor, we wanted to chat to you about the semiconductor situation, the missing chips. Or do we still have a negative impact on demand for platinum group metals from the automotive industry because of the shortage of chips?
Thank you. I think it's a good topic to talk about because I think there's been a lot of concern about the semiconductor shortages and how they might impact certainly vehicle production. And I think that's played into negative sentiment, certainly towards platinum and palladium. So unpacking it, I think, is helpful. So firstly, let's just remember why there is the shortage. I think during the pandemic, there's been huge demand for electronic goods, iPads, screens, computers, etc. So there's been a huge demand for these chips. There's also been disruption to the global supply chain, both in the manufacture and the distribution of those chips. So that's what's led to it. In terms of vehicles, you know your own vehicle, there's been a proliferation of chips with all sorts of things that can do all sorts of things. And I'll come back to maybe how the automakers are trying to address that. But in general, we've had concerns about the number of vehicles being produced, both from a semiconductor chip shortage point of view and just in terms of economic well-being and consumer preferences. So what we've seen is that people like LMC, IHS, Fitch that forecast vehicle production, their forecasts have been extremely volatile. They've been up and down, and you've heard numbers thrown around of 3, 4, 5, 6, 7 million less vehicles. And you need to be quite careful which vehicle group you're looking at. But in general, we think that there is a swing of 3 to 4 million vehicles in the last few months. That certainly is relevant, and we've tried to unpack what that means in terms of PGMs. So what we've identified is we've tried to sort of break it down and say that we used Fitch forecasts because they're the most public and available to investors, to anyone that wants to have a quick look. LMC and IHS are a little less public. But in general, we took both light-duty and heavy-duty vehicles at around about 85 million vehicles to be produced in 2021. And this could then come down by 2 or 3 or 4 million vehicles. So what we've done is that if you believe that there'll be a loss of about, say, 3 million vehicles from 85 down to 82. What that means for platinum is a loss of about 35,000 ounces of platinum per million vehicle production that is lost. And that's total light duty and heavy duty. If you look at palladium, you see that that loss is over 100,000 ounces, about 105,000 ounces. And the reason for that, Martin, is just globally, there are more gasoline vehicles than diesel. Globally, there's about 20% diesel vehicles in the world and about 80% gasoline. So you would expect the effect to be more profound on palladium. So if you take 3 million vehicles down in production, and this allows anybody to take their own view on what that loss is, and then you multiply by 35,000 ounces for platinum or 105 for palladium, it gives you a feeling. So platinum down maybe 105,000 ounces, palladium more like 300,000 ounces or a bit more than that. The other thing is that, what automakers can do about this. So one thing they've done is to try and reduce the number of optional extras available. So things like automatic handbrakes, when you put your foot on the brake pedal, that requires a chip. So they remove that optional extra and save a chip. So they're doing as much as they can to use less chips on the vehicles, be able to then finish the production and get them sold. The other thing they can do is they can focus on their high margin products. So heavy duty vehicles, there's a great to make sure that you don't start selling trucks. And certainly the large, typically diesel SUVs in Europe, Daimler, Mercedes, Volvo, all of those are high margin and they're being focused on. So what we believe is that if the focus of the mix is towards the higher margin vehicles as well as the larger vehicles, that certainly benefits platinum because a lot of those vehicles are platinum. So in our scenario, we believe that for that adjustment to the product mix, that effect on platinum will go down to about 28,000 ounces per million, whereas palladium, it stays pretty much the same. It hardly changes. So that's the impact that we've sort of looked at. We'll publish again on the 24th of November. We'll have detailed granular insights from LMC directly, and we'll model those and try and give you a more accurate impact on what we expect to happen in 2021 and then also going into 2022.
Isn't this chip shortage continuing to add less to this year's oversupply estimates for platinum?
Yes, I think the market has assumed because of this chip shortage, there'll be much less demand for platinum, and then the suggestion is there'd be a higher surplus. So we published most recently a surplus for the platinum market in 2021 of about 190,000 ounces. So in my argument of maybe 28,000, that adds another 88,000. So instead of a surplus of 190, we have a surplus of 280. And that in itself certainly doesn't warrant massive price reduction or huge negative sentiment. And what we do know is that the opposite thing happening is that we do have a lot of substitution of platinum for palladium, and certainly supply remains fairly constrained. So we think that swing is, yes, material and yes, of a concern, but certainly shouldn't be harming sentiment that it has.
So overall, what is the outlook of the World Platinum Investment Council for the medium term?
Thanks, Martin. So as I said, we published on the 24th of November. It's the first time that we put out our forecast for the full 2022. And I can't really front run any of that data that we're still busy gathering. But I think in general, we've got two effects, I suppose, on the semiconductor specifically, is that the views are that this initially was going to be resolved in 21. Now it's running to 22, and there's now real concerns that it might run right through 2022. What we do know is as soon as the automakers were able to resolve the issue and chips start to flow, consumer demand hasn't really gone away. The fact that the Delta variant isn't doing as much harm as the market believed it might, there certainly is pent-up consumer demand. So as those chip shortages are resolved, we actually think 2022 you might have higher estimates than are currently in place. It would certainly give you more demand and reduce any surplus. The other thing is that we think that the substitution is very material and supply is flat at best. We know we had that release from built-up material that'll come through certainly this year and next. But in general, supply is still very much constrained. So over the next 2 or 3 years, certainly there's a far higher likelihood that platinum will be in deficit rather than in surplus. And we think that's what the market is recognizing right now.
That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research at the World Platinum Investment Council.